Good afternoon.
Hello.
I'm Jack.
And I'm Bill.
And this is the Jack and Bill Show. It's Casual Friday here again at Eagle Financial with the market having just closed. We're looking forward to a long Labor Day weekend. I wanted to give you a market recap. You know, we've had a lot of volatility in the last few weeks, down the last several weeks, but this week the S&P 500 climbed about 3 percentage points, Bill, to today, the S&P was up fractionally. NASDAQ was down a little bit. The Dow was up a little bit. The bond market continued its run up marginally today. But so year to date, the S&P 500, the broad U.S. stock market, is up about 18.3%. So very strong year so far. Also, we had talked about rarefied air a few episodes ago, and the 30-year bond yield closed today at 1.959%. Never before in U.S. history, up until a couple of weeks ago, have bond yields been below 2% or this low in the United States. Still higher than Japan and Europe and, you know, most of the developed world. But our daughter Hannah, we were discussing this week, just bought a new home, and she has a conforming loan with a 30-year fixed interest rate of 3 1/8 or 3.125%. I think the average is about 3 3/8. The average of all loans in the United States now for 30-year fixed is about 3 3/4, and the 15-year at about under 3 1/4 now. So this is a wonderful opportunity for our viewers. If you're in the 4s and 5s, you should be looking at refinancing. We've also noticed with this huge drop-off in interest rates, this decline, this move for our central bank, our Federal Reserve, Jerome Powell and his cronies moving to an easing stance, having eased once and getting ready to ease again September the 18th, that we've seen natural resources and commodities moving higher. Notably, gold at closing today at $1,533 an ounce, kind of flat, down a little bit, but silver up sharply this week, up 13 cents today, 2/3% or more at $18.45 an ounce. By the way, Bill, what's with your garb here?
Well, we are in Louisiana, home of Mardi Gras, and I did grow up on Mr. T. I pitied the fool. Like that Tweety Bird ring, huh? But since we are talking about precious metals, I thought it'd be apropos to throw on these Mardi Gras beads. There has been a renewed interest in precious metals investing. We've seen gold shoot up about 21% year to date. Silver is up 18%. And then you have alt currencies, things like Bitcoin, up 157% year to date. Now, why am I even throwing in alt currencies in the same context as precious metals? Well, I'll tell you, there are many reasons why people invest in precious metals. You know, historically, precious metals have been used as a portfolio hedge, or you could say an insurance policy against downside. Gold is the ultimate hedge against any kind of calamity. Silver is unique in that it has industrial applications, so people may invest in silver as a hedge and also for industrial purposes.
You know, Bill, I'd like to add in there the aspect of the inflation hedge. You're not really getting inflation protection in the bond market today. So that's one of the reasons why we're seeing gold move higher. But both gold and silver were currencies of the Bible. So for, 5,000 years or more, if you happen to have a 1-ounce gold coin in your pocket dating back several hundred years, you could buy a very fine men's business suit. So today you could get a $1,500. That would buy you a very nice men's business suit. But of course, we don't wear suits on Casual Friday. I'm sorry, Bill. Go ahead. Continue.
Well, the other aspect of gold and silver is that they are alternative currencies. And just like alt currencies, precious metals, as Jack said, historically have been used for currency purposes. And these are real currencies, unlike the fiat currencies that we carry in our wallets and purses. This is real currency. It has real value. It's tangible. You can hold it in your hand. It doesn't disappear. It doesn't corrode. And what we've mined is basically what we have. Now, silver, on the other hand, we do use it up. It does get depleted through industrial applications. But one of the reasons why people are so interested in gold and silver and alt currencies this year is because of the concern of central bank missteps. We see these central banks around the world doing everything they can to drive interest rates lower and lower to try to spur economic growth. And negative interest rates are not sound economic policy. And so people are concerned.
Weak dollar policy, we might add.
Absolutely. So central bank policy missteps and currency devaluations, increased geopolitical risks, all of those things create increased demand for gold and silver. And, you know, as I mentioned, gold is the ultimate hedge, but gold doesn't pay interest. And so for a lot of investors, Warren Buffett notably, gold is just not attractive because you earn no income on that holding. There is an opportunity cost in owning gold and silver, and that is what you can earn in another asset. But with interest rates on fixed income investments, bonds, going lower and lower and lower, the opportunity cost of you holding gold and silver is less.
Yeah, I'd love to jump in there and just add, you know, if you look at Roger Ibbotson and Associates, Stocks, Bonds, Bills, and Inflation, SBBI, dating back to 1926, they've done all the historical market research, and large company stocks like the S&P 500 have returned about 10% per annum, small stocks about 12%, but U.S. Treasury bonds, U.S. Treasury notes, 10-year treasuries have returned historically about 5%. And with CPI inflation at about 3%, you've had a 2% premium over inflation throughout the years. Well, we just articulated that the 30-year bond is at less than 2, and the 10-year is at 1.4. So we're not keeping up with inflation with our bonds, and I think that's causing a big move in metals this year. So as just looking at the returns of these different asset classes, where gold and silver have historically done better than inflation, and we're not going to get that out of bonds right now. We think that bonds deserve a place in our portfolios, although we're keeping duration kind of short right now. But we are looking into alternatives and natural resources and precious metals for an inflation hedge. Back to you, William.
And so a lot of people want to know just how they can invest in precious metals. I would say for starters, you need to evaluate why you want to buy it in the first place. Some people wish to own precious metals really as more of a doomsday hedge, something they can put in a safe and set aside for the worst possible scenario. That's not what we're doing here. We're looking to incorporate precious metals and other alternative investments into diversified portfolios as a way to improve portfolio efficiency. And what I mean by that is getting the biggest return we can per unit of risk. So we know that alternative investments can improve the risk-reward balance in the portfolio. The efficiency can be improved by incorporating these things. Now, yes, you can go out to a precious metals dealer. You can buy bullion, bars, coins. You can buy semi-numismatic coins, collectibles, whatever you are interested in. And we would caution you that before you do that, you really need to know what you're looking to buy, and you need to have a very high level of trust with the dealer. There are cases of dealers that have gone out of business and left the investors hanging. So just bear that in mind. And then there's practical considerations. If you buy physical precious metals, there are storage costs, there are security issues, so it may not be the best way to go for you. So we're looking at adding in precious metals exposure in a liquid way inside of an investment portfolio. Now, I'll also add that most custodians will not accept physical metal into your account. There are some exceptions, but as a general rule, they do not. And so we look for other ways that we can get that exposure. One of the more popular ways of getting exposure to precious metals is through exchange-traded funds. And years ago, Jack and I did a lot of due diligence in that space. We read everything that we could about these investment vehicles. We did everything that you would not want to do yourself and you would hire us to do. And at the end of the day, after reading all the documentation and having lengthy phone calls, we just couldn't get comfortable. There's so many moving parts in these exchange-traded funds.
IOUs, paper
Yes.
gold. I think of symbols
Yes.
like GLD and IAU. We would be avoiding those, what we call paper gold. We don't think that there is an adequate amount of physical gold backing the assets of these funds. In other words, it should be 1-to-1, 100%. We don't believe that to be the case.
That's a very good point, because as we said, there's only so much gold that's been mined in the history of mankind. And if we suddenly have a run on gold and people are flocking into these ETFs, where is the physical bullion backing up those shares? And so we can see a problem with that. And there's other issues too. We found what we would call a better mousetrap. And after our due diligence, we concluded that the best way for us to get exposure, our clients, are through closed-end funds. And so we identified a number of closed-end funds that we really like. And the big difference between the closed-end funds and the exchange-traded funds is that the closed-end funds have a finite number of shares. So the only way that there are new shares out for purchase is if they do a secondary offering. But what they have in collateral in the safe will remain there. It never changes.
They take the money from the IPO and go out and buy the physical bullion, and then they store it. And if you would like to take possession of it, you're able to do that as well.
That's another important difference. So we feel like we found the best way to do that. And then another way that you may want to get exposure to this space in a more leveraged way is by investing in the equities, the mining companies.
Mm-hmm.
That's a beaten up space.
Absolutely.
And for someone who would like indirect exposure to precious metals or other metals like industrial metals and such, they could invest in mining companies and actually have an opportunity to earn income through dividends.
And we do this in a diversified fashion
Yes.
as well.
So we just wanted to, address that today, a little special note on an interesting asset class, and feel free to reach out to us. We have, I'd say, a wide skill set in the space. We're not experts, but we know the people that are, and we will help you in any way we can.
That's good, and we brought that up today because both gold and silver are making 2-year highs. Silver making a huge breakout this week. So again, let us know if you have any questions or comments or concerns or would like some help. And we wish you from Eagle Financial a safe and happy long 3-day weekend.
Watch some U.S. Open tennis. Watch some college football.
Go Tigers.